In January 2024, something changed forever. Bitcoin ETFs were approved, and in just 12 months, they raised $34 billion. This isn't hype. This isn't a bubble. This is Wall Street finally entering the game. And while you're sitting there thinking, oh, I missed Bitcoin, big investors are quietly accumulating through ETFs. But here's what nobody is telling you. 2026 is going to be the year this explodes for real. Ethereum ETFs just got approved. Solana, XRP, Dogecoin, all with ETFs on the way. And today, I'm going to show you exactly what's happening, why this matters, and how you can take advantage before it's too late. Because this window, it won't stay open forever. Let me ask you a direct question. Do you know what an ETF is? If you don't, that's okay. Most people don't. And that's exactly why they're missing the biggest financial opportunity of the decade. ETF stands for Exchange Traded Fund. Basically, it's a fund you buy like a stock. But instead of buying Bitcoin directly, you buy a share of a fund that owns Bitcoin. Why is this revolutionary? Because now anyone with a traditional brokerage account can invest in Bitcoin without needing a digital wallet, without fear of hackers, without technical complications, and that changed everything. Because when you make access easier, trillions of dollars enter the market. And when trillions enter, prices explode. And if you think you already missed Bitcoin because it's expensive, you haven't understood anything yet, because the game is just beginning. So pay attention, because I'm going to explain what these ETFs are, why they're exploding now, which ones you should consider, and how to get in without making beginner mistakes. Let's get straight to the point. First thing you need to understand, Bitcoin ETFs are not Bitcoin. When you buy a Bitcoin ETF, you do not own Bitcoin directly. You own a stake in a fund that owns Bitcoin. But why would anyone do this instead of buying Bitcoin directly? Three main reasons. Reason one, security and regulation. When you buy Bitcoin directly, you are responsible for keeping your private keys. If you lose them, the money's gone. No recovery, no support. But with an ETF, giant companies like BlackRock, Fidelity, Grayscale are custodying the Bitcoin for you. It's regulated, it's audited, it's safe in the traditional sense. Reason two, easy access. Many people don't want to create an account on a crypto exchange, don't want to deal with wallets, don't want to learn about seed phrases. With an ETF, you go into your traditional brokerage app, like any stock, and buy. Simple, fast, familiar. Reason three, taxes and financial planning. ETFs can be included in retirement accounts, 401k IRAs in the US. This means pension funds, family offices, large institutional investors can now allocate to Bitcoin, and they're doing it heavily. BlackRock's Bitcoin ETF, IBIT alone, raised $25 billion in 1 year. That's more than most traditional funds raise in a decade. If you still think Bitcoin is nerd stuff or a scheme, Wall Street disagrees with you. And Wall Street has trillions. Now let's get to the facts. January 2024, SEC approves the first Bitcoin spot ETFs in the US. 11 ETFs launch simultaneously. Market goes crazy in just 12 months. Bitcoin ETFs raised $34 billion. BlackRock's IBIT alone, $25 billion. Fidelity's FBTC, billions too. Grayscale's GBTC converted from trust to ETF, and it didn't stop. July 2024. Ethereum ETFs are approved. Altcoin market starts waking up next in line. Solana, XRP, Dogecoin, Litecoin. What does this mean? It means institutional money is no longer afraid. They saw Bitcoin survive. 80% crashes, country bans, constant FUD, fear, uncertainty, doubt, exchange bankruptcies. And still, Bitcoin came back, Ethereum came back, and now they're buying. But here's the point. Most regular people still haven't entered, because while Wall Street is already in, the average Joe still thinks it's too late. And that's where the opportunity is. When gold got its first ETFs in 2004, gold price was at $400 per ounce. Today, over $2,000 per ounce, 5 times in 20 years, just because it became easier to invest. Bitcoin in January 2024, when ETFs launched, $45,000. Bitcoin in 2025 hit $100,000 plus. And now with Ethereum ETFs, Solana ETFs, XRP ETFs coming, you think it's going to stop here? So, which are the ETFs that really matter? I'll give you the top 5 Bitcoin and the main Ethereum ones. Bitcoin ETFs, top 5. 1. BlackRock iShares, Bitcoin Trust, IBIT, the biggest of all, $25 billion in assets fee, 0.25% per year. Why it matters: BlackRock is the largest asset manager in the world, $10 billion trillion under management. 2. Fidelity-wise origin. Bitcoin Fund, FBTC, second largest billions in assets. Fee, 0.25%. Why it matters. Fidelity is trustworthy, traditional, respected. 3. Grayscale Bitcoin Trust, GBTC, the oldest converted from trust to ETF. Fee, 1.50%, more expensive. Attention, high fees, but it was the pioneer. 4. ARK 21 shares, Bitcoin ETF, ARKB, Cathie Wood, ARK Invest. Fee, 0.21%. Why it matters. ARK is known for disruptive investments. 5. Bitwise Bitcoin ETF, BITB. Fee, 0.20%. Focused on crypto-native investors. Ethereum ETFs, main ones. 1. BlackRock iShares Ethereum Trust, approved in July 2024, following same model as Bitcoin 2. Fidelity Ethereum Fund, also approved tracking Ethereum price. 3. Grayscale Ethereum Trust, converted. How to choose? Simple. Lower fee equals more money in your pocket. Long-term higher volume equals more liquidity. Easy to buy, sell. Trustworthy company equals security for most people. iBet, BlackRock Bitcoin, or FBTC, Fidelity Bitcoin. They're the biggest, most liquid, and cheapest. These ETFs are for long-term investment. It's not a casino. It's not day trading. It's strategic allocation. If you can't handle seeing negative 30% in a month, crypto, even via ETF, isn't for you. Now comes the interesting part. Bitcoin ETFs were just the beginning. Ethereum ETFs have already been approved, and they're growing. But what comes next? Next in line. 1. Solana SOL. ETF applications already filed. VanEck, 21 shares. Other major players wanting to launch. If approved, Solana explodes. 2. XRP Ripple. Legal battle with SEC finally resolved. ETF applications being filed. Institutional market would love to have access via ETF. 3. Litecoin LTC. Bitcoin Silver already has pending applications. 4. Dogecoin Doge seems like a joke, but applications have been filed. If Elon keeps promoting, who knows? Here's the pattern you need to understand. When an ETF is approved, the asset price skyrockets. Why? Because billions of institutional dollars enter at once. So the smart play? Position yourself before the approvals. But attention, this is speculation, high risk. Only enter with money you can afford to lose. If Bitcoin went from $45,000 to $100,000 plus after ETFs, what happens when Ethereum, Solana, XRP get the same trillions of access? Okay, so you're convinced. You want in. How do you do this right? Step 1. Choose your brokerage. If you already have an account with a traditional brokerage, Fidelity, Charles Schwab, TD Ameritrade, etc., you can probably already buy crypto ETFs. Look for the symbols: iBit, FBTC, GBTC, etc. Step 2. Understand the fees. ETFs charge an annual management fee. Example, 0.25% per year means for every $10,000 invested, you pay $25 per year. Seems small, but over 10 years, it makes a difference. Choose ETFs with fees below 0.30%. Step 3, don't put everything in at once. Crypto is volatile. Very smart strategy, dollar cost averaging, DCA. Instead of putting $10,000 in at once, put $1,000 per month for 10 months. This smooths out volatility and reduces risk of entering at the top. Step 4, have a long-term horizon. If you'll need this money in 6 months, don't invest in crypto. But if you can leave it for 3 to 5 years, history shows it's worth it. Step 5, diversify. Don't put 100% of your portfolio in Bitcoin ETF. Golden rule, maximum 5 to 10% of your total wealth in crypto. The rest, stocks, bonds, real estate, etc. And one last thing, ETF is not the same as owning Bitcoin directly. If you want to really own it, buy Bitcoin directly and store it in a cold wallet. But if you want exposure without complications, ETF is perfect. So, recapping: 1. Bitcoin ETFs raised $34 billion in 12 months. 2. Wall Street is finally in. 3. Ethereum ETFs have already been approved. 4. Solana, XRP, and others are coming. 5. This is the biggest facilitation of crypto access in history. Now you have 3 choices. Choice 1, ignore all of this. Keep thinking it's too late, and in 5 years look back with regret. Choice 2, be afraid. Think it's too risky, and let Wall Street take all the profits. Choice 3, act. Educate yourself, allocate a small percentage, and be positioned when the next wave comes. Look, I'm not telling you to put all your savings in Bitcoin. I'm telling you that the game has changed. Crypto is no longer internet stuff. It's a legitimate asset class, and ETFs proved it. So the question isn't, should I invest in crypto? The question is, how much of my portfolio do I allocate so I don't miss this opportunity? If this video showed you something you didn't know, leave a like. Comment below, do you already invest in Bitcoin, directly or via ETF? Subscribe to the channel because I'll keep bringing the best opportunities in the financial market. Bitcoin ETFs aren't hype, they're the future, and the future has arrived. Now act.